I know exactly how you feel right now. You're staring at the screen. The market is closed, or maybe you just forced yourself to walk away. Your chest feels tight. You're running the math in your head over and over again. If I had just stopped at 10 a.m., I would be up $500. Instead, I'm down $1,200. It's the worst feeling in the world. It's not just about the money. It's the betrayal of self. You promised yourself you wouldn't do this again. You wrote it in your trading journal. You swore that today would be different. But then, the market opened, a candle moved, and something primal took over. Welcome to the club. Every single successful trader I know has been exactly where you are sitting right now. The difference between the ones who make it and the ones who quit isn't a better indicator or a faster computer. It's the ability to stop. Today, we aren't just talking about discipline in a vague, motivational way. I am going to walk you through the specific psychological mechanisms that cause overtrading, and I'm going to share the single rule, the hard stop protocol, that actually saved my trading career when I was on the brink of blowing my third account. 2. Diagnosing the addiction. Before we get to the solution, we have to diagnose the illness. Why do we overtrade? Logic says that if your edge is present, you trade. If it's not, you sit on your hands. It sounds simple, but trading isn't a logic game, it's a chemical one. Overtrading usually falls into 3 distinct categories. You need to identify which one is yours. First, there is boredom trading. This is the sniper who gets tired of waiting in the bushes. You've been sitting for 2 hours. The market is chopping sideways. You feel like you're working, but you aren't producing. So, you start to hallucinate patterns. You subconsciously lower your standards just to feel the rush of participation. Second, there is revenge trading. This is the most destructive. You take a loss, a perfectly valid, systematic loss, but your ego takes it personally. You feel like the market stole from you. You try to win it back immediately. You increase your position size. You ignore your stop loss. You are now trading to numb the pain of the previous loss. And third, the silent killer, euphoria trading. This is when you win 3 trades in a row. You feel invincible. You think you have figured out the market. Your dopamine is through the roof. You enter a state of overconfidence, you oversize, and you give back a week's worth of profits in a single afternoon. All 3 of these are driven by dopamine loops. When you click that buy button, your brain releases a hit of dopamine. It's the exact same chemical pathway activated in a slot machine player. The anticipation of the reward is actually more addictive than the reward itself. You aren't trading for profit anymore, you are trading for the action. 3. The biological reality, fight or flight. Let's go deeper into the biology. When you are in a drawdown or spiraling into an overtrading session, your amygdala, the lizard brain, hijacks your prefrontal cortex. The prefrontal cortex is where you make rational decisions. It's where your trading plan lives. The amygdala is your fight or flight response. When you start overtrading, essentially, you are entering a threat state. Your heart rate increases. Your vision literally tunnels. Blood leaves the logic centers of your brain and goes to your muscles. This is why, when you look at your charts at the end of the day, you ask yourself, what was I thinking? The answer is, you weren't. You were biologically incapable of thinking clearly in that moment. You were a caveman fighting a bear, but the bear was a candlestick chart. To stop overtrading, we have to interrupt this biological sequence. We have to build a firewall between the urge and the action. 4. The rule that saved me. So, how do we fix this? I tried everything. I tried sticky notes on my monitor. I tried having my partner hide my mouse. Nothing worked until I implemented the 2-strike rule, combined with the physical reset. Here's the rule that saved my career. It is non-negotiable. The 2-strike rule. I am allowed a maximum of 2 losses in a single trading session. That's it. If I lose 2 trades, whether they are consecutive or separated by a win, I am done for the day. I am physically required to close my platform. Why 2? Because after 1 loss, you can usually maintain your composure. You can frame it as a cost of doing business. But after 2 losses, the psychological dam breaks. The urge for revenge kicks in. The frustration mounts. The statistical probability of me making a stupid decision after 2 losses skyrockets. By capping my losses at 2, I protect my mental capital. Money can be earned back. Mental capital, your confidence and your emotional stability, is much harder to rebuild. But a rule isn't enough. You need a mechanism to enforce it. That brings me to the physical reset. 5. Discipline strategies and interrupters. Discipline is not a character trait, it is an environment you create. You cannot trust your willpower in the heat of the moment. You have to outsource your discipline to your environment. Here are 3 practical strategies I use to ensure I don't break the 2-strike rule. Strategy 1. The pattern interrupt. If I take a loss, even just one, I have a mandatory 15-minute walk-away rule. I must stand up, leave the room, and drink a glass of water. I am not allowed to look at the charts. This forces the dopamine levels to drop and the cortisol to flush out. It brings the prefrontal cortex back online. If I come back in 15 minutes and the setup is still there? Great. If I missed it? Great. Strategy 2. The hard stop. Most trading platforms allow you to set a daily max loss limit that locks you out of your account. Use it. Call your broker if you have to. If you have an addiction to overtrading, you cannot be the one holding the keys to the liquor cabinet. Lock the account once you hit your risk limit. Strategy 3. The why card. Before I enter any trade, I have to speak out loud, literally, verbally, why I am entering. I am entering long because we bounced off the 200 EMA and volume is increasing. If I cannot articulate it in a clear sentence, I don't take the trade. Overtrading thrives in silence and speed. Speaking slows you down and forces accountability. 6. Emotional regulation and identity. We need to talk about identity. The reason you overtrade is likely because you are deriving your self-worth from your P&L, profit and loss. If you have a green day, you feel like a genius. If you have a red day, you feel like a failure. This roller coaster is unsustainable. You have to shift your identity from being a trader who makes money to being a risk manager who executes a system. In my career, my breakthrough happened when I stopped trying to make money every day and started trying to trade well every day. There is a massive difference. A casino doesn't panic when a gambler wins a jackpot. The casino knows the math is in their favor over the long run. You need to be the casino, not the gambler. The casino doesn't overtrade. The casino just opens its doors, follows the rules, and lets the probabilities play out. When you overtrade, you are acting like the drunk gambler at the roulette table at 4 a.m. You are chasing the high. 7. Signs you are about to spiral. How do you catch yourself before it's too late? You need to recognize your tells. These are the subtle signs that your psychology is cracking. For me, my tell is staring. If I find myself staring at the screen, barely blinking, leaning forward, with my hand gripping the mouse tight, I know I'm in danger. For others, it might be bargaining. Please, just go up, just let me break even. Or it might be switching time frames. You enter on a 5-minute chart, the trade goes against you, so you switch to the 1-hour chart to find a reason to stay in. Write down your tells, post them on your wall. When you see them, that is your signal to abort the session. Building resilience. Recovering from a period of overtrading takes time. If you have been overtrading recently, you need a detox. I recommend simulated discipline. For the next week, trade on a demo account or with significantly reduced size, maybe 10% of your normal size. Your goal for this week is not to make money. Your goal is to take exactly 1 or 2 perfect setups per day and then stop. You are retraining your brain. You are teaching your brain that the win is following the plan, not the dollar amount. You need to rewire the dopamine reward system to celebrate discipline, not just profits. The next step, trading is the hardest easy money you will ever make. It strips you naked and reveals every flaw in your character. Overtrading is just a symptom of a lack of trust in yourself or your system. The 2-strike rule saved me because it stopped the bleeding. It gave me permission to lose small so I could win big later. Here's my challenge to you. For the next 30 days, implement the 2-strike rule. 2 losses, and you walk away. No exceptions, even if the market rallies without you. Even if you see the perfect setup 5 minutes later. You walk away. Prove to yourself that you are in control. Because if you can't control your fingers, you will never control your financial future. Stop trading for the dopamine. Start trading for the freedom.